There's one strategy that I actually been using for Forex trading for years, and it's like the easiest strategy for complete beginners. I don't even need to use any different strategy than this one, and in this specific video, I'm gonna show it to you. Hey everyone, this is Christian here on YouTube, and welcome to a brand new video for the channel. In today's video, we're gonna talk about the easiest Forex strategy for complete beginners. But hey, if you're new to my channel and you're into day trading in general, Forex, crypto, or any type of making money online, then this channel is for you. Make sure you hit that subscribe button below and activate the notifications bell icon so that you get a notification every new video that I upload. With that being said, let's jump into the video. Alright, so how is it that this strategy actually works? It's very simple. You're just gonna need two different moving averages, two different indicators that I'm going to share with you right now. I'm gonna hide the rest of the indicators right now because I do believe that this is all you need. As a matter of fact, is the 200 simple moving average or 200 EMA, whichever you prefer. Honestly, I do go with the exponential moving average because it's a lot more technical and it sees more of the momentum of the pair of the asset. So I'm gonna go with it. So yeah, it is going to be the 200 EMA against the 20 EMA. As simple as that. You're gonna add these two to your chart. I'm using TradingView. I'm putting the link to it in the description of this video in case you guys want to use the exact same chart. I do recommend you guys to get the premium version or like the paid version. There's like a $14 per month version, simply because it will allow you to use more than one indicator, and that's priceless. Okay, so what we're going to be doing basically is identifying the change on trending on these specific pairs. The way we actually do it is simply by looking at the cross of the 50 EMA against, the 20 EMA against the 200 EMA, which is happening right now. See, it's super important that at the moment of the crossover, you're not entering the trade. We're going to talk about how is it that it works. I'm going to go with the strategy settings and so on, but super important that you understand exactly how the strategy works, and is a change on trending, which means that whenever you see that crossover, there's going to be a change on trending, so it can go up, then another change on trending is going to go down, then another, and so on. Okay, this strategy is simply like around 70 to 75% accurate, which in terms of Forex trading, it's a lot of money based on the risk ratio that we're going to talk about in just a little bit. So this is the first thing that you need to understand how it works. Now let's go through the settings. You're going to add the 200 EMA. You can go to indicators and type in EMA, and you're gonna see the moving average exponential. You add two of them, and you need to add the 20 and the 200 EMA. You can choose the colors. It's really up to you what is it that you want to do. But whenever you see the crossover like it's happening right here, you're not gonna enter immediately, but you're gonna go and enter after the crossover. By the way, this is 1 hour charts. Okay, this is a day trading strategy. So look, let me just go ahead and get the pen. Whenever you see this crossover right here, you don't enter here, but you enter on the next one. Why the next one? Because the next one, it basically confirms that there's going to be a change on trending. Okay, so you don't enter here or anywhere here. You enter after the cross. Okay, let me say that one more time. You enter after the cross. Either this or this one is good after the cross. Okay, hopefully that actually makes sense. So when that happens, you're gonna enter a long position because it's crossing going up. Okay, let's say that you enter on this one because you weren't sure. So you enter this trade going up. Simple as that. Now, let's go ahead and talk about setting up the stop loss and the take profit so that you understand exactly how to place your position. The first thing that you gotta add is actually an extra indicator called ATR. Okay, ATR. Why is that? Because that one is going to tell us how much should be the take profit or the stop loss. Now, this is a beginner's level. On a future video, I'm going to tell you how I choose my take profit and stop loss like in a more advanced way. But now, if you're a complete beginner, this is what you got to do. Go ahead and choose the ATR. Now, the ATR, as you can see, has some digits right here. It basically tells you within the last 14 candles, what is the pips average. So it is 12. because the last one is a microdecimal that we do not take account of. So the 12 is actually 12 pips that every candlestick has the value for the last 14. So in order for you to set a safe or a kind of a safe stop loss, it's going to be 2 of those candlesticks, meaning 24 pips. So what you do is that instead of going and guessing what is it that you're gonna do, you go with 24 pips like I did right now. I don't know, let me just go ahead and choose it right here. 240, because the last microdecimal is gonna change. There you go, 240. That's how you choose the take profit. Now, I'm sorry, the stop loss. Now, how is it that you're gonna choose the take profit? This strategy can easily give you 5, let's say 4.0, all right, 4.0, because I don't want you guys to get crazy. And look, at the beginning, you can even start with 2.0 or 2.5. Let's start with 2.5. That's what you can start with. And then I'm going to talk about trailing stop in just a little bit and teach you how you can make even more money than that. So with this setup, what you actually saying is that you should be risking no more than 2% of your balance. Okay, you can be risking 1%, which is good, but 2% is fine. Once you actually do that, in order to know how much profit you can make, you basically are going to have this times the risk reward ratio. The risk ratio is going to be 2.5, which means that this times 2, you are aiming for a 5% return. Okay, this is not bad at all. Usually strategies that people recommend you are like 1-1 because they don't want to risk much. That means that if you risk 2, you can win 2, but I'm actually giving you one that you can double your money for. Okay, so once you actually set that up, this is what's going to happen. By the way, you can win it, you can lose it. Again, it's not 100% because a lot of people are going to be like, so here you're going to be monitoring the trade. Remember that we are looking at 1 hour candlesticks. So this is not what, this is not, how can I put it? Since it's 1 hour candlestick, don't look at it as one trade that you need to be looking at the whole time. You can monitor it on your phone, or you can just simply check it out once in a while, okay, in order to move some setups and stuff. Here we can see that now the 200 EMA actually changed the trending. So since it changed the trending, it became an uptrend. So here we are, a few hours later, we were able to make that profit. The take profit was actually hit. Now, this is super important. What is the best risk ratio? If you're not going to be monitoring your trade at all, go with 2.5 risk reward ratio. Okay, if you're not gonna monitor because you gotta go to work, because you work in a call center, you can't have your phone in, it's up to you. Go ahead and don't do that. Okay, that's actually super important. Go ahead and leave it as 2.5. That way, boom, you won the trade. Now, let's talk about the trailing stop, which in my specific, in my personal opinion, it's like the profitable side of every single strategy. So what we're gonna do is this right here. I'm gonna add another one somewhere here because I need to actually deduct it. What you're gonna do is that whenever the price goes to 1.5 ratios, let's say right here, you're gonna move it. Actually, in 1.0, you can move it like to the entry point. What I mean is you actually are risk-free. So instead of entering, instead of having a stop loss below and losing 2%, you're gonna move the take profit to a higher level. And I don't want to move it because I don't want to mess up with the pictures and stuff. But what you're gonna do is that you're gonna move the stop loss. This level, you're gonna put it right here. That way, even if the trade goes in the opposite direction, it gets closed, you're not gonna lose any money. And you move the take profit 1 risk reward ratio more. This one right here, the take profit was at 2.5. I'm gonna add another one because I don't wanna delete the previous one. But your entry point now became this again. But the stop loss is 0. You're not going to lose any money. And the take profit becomes 3.5. I try to do it with 2 pictures, but it's going to be impossible. So you move the take profit here, the stop loss here. And what you're going to do is move this to 3.5. Okay, just imagine that your stop loss is right here because I can move it without you guys looking at the picture. So if this happens, what you're going to be doing is every one risk reward ratio more, you're gonna raise it one risk reward ratio more. So I'm gonna add some indicators right here, some lines. There you go. So once it hits here, what you're gonna do is that you're gonna move it one more here. So you got two levels right there, and you move the stop loss at a higher level, making trailing stop. Okay, once the price continues and reaches a new, for instance, once it reaches the 2.5, you can move it all the way up one more time. 4.5, you move it right here, 4.5, and then you just monitor it. Okay, the stop loss now should be around here. Now it actually touched, if you notice, it touched the 3.5. You can move it all the way up one more time. Hopefully this is not as confusing as I'm actually explaining it. There you go. You have one more step. And just like that, you continue to do it up and up and up and up and up. Look, I'm just gonna speed it a little bit more. There you go. We're gonna see if you do this, where you can get as a profitable trade. Okay, once there is a change in trending, it keeps on jumping and keeps on jumping. Hold on, I'm just gonna move this. Let's see if it goes up. It went up one more time, all the way to this level, and now it started dropping. So now let me just go ahead and get back a little bit right here. This is as far as it actually went up. 15.56 risk reward ratio. 15.56 risk reward ratio. It's not bad at all. It's a lot of profit. That basically is around 30%, 31% in profit, and that's always going to be something good. Now this is the opposite going on right here. Now it went kind of fast, which is fine, but we're still going to be able to catch this example. So basically what we do is that we enter a short position, not here, but here, in this one right here. Okay, now we take a look at the actual the ATR, which right now it's 24. I think we can go back around this area. All right, so let's go ahead and take a look at the ATR. That's super important. At the cross, there you go. This is the exact entry that you should have. So that's 19. So if it's 19, that's 38 around this area, pretty much. There you go. And again, we're gonna go 2.5. Perfect. So now we're gonna just let it run. Sometimes you're gonna win easy trades, sometimes it's gonna take more than that. Now remember, you're gonna do some trailing stop. There you go. There, it would be a great point to actually do some trailing stop and go to 3.5. It continues dropping, so perfect time to actually do 4.5. Actually, now it's actually time for 5.5. And that's going to continue going like this up until it becomes more and more profitable. All right. I know it sounds complicated, but trust me, once you actually get the hang of it, you're going to be good to go. Now, this trade actually was very profitable. As a matter of fact, right now, there was one entry point that I had and made money with it. This one actually got all the way to 632. I can show you my broker's account and show you right here that this USD CHF was actually touched with $1,141. So yeah, it is something possible. It is something doable. I just need to get the hang of it. And super important, the trailing stop. Otherwise, you won't be able to make money. Now, before I actually finish with this video, I do want to show you one tool that actually sent these signals so that you could actually make money. You can see right now that USD CHF right here, you got an arrow and that was a signal, and you got an arrow right here telling you this was a buy option, this was a sell position. So if you want to use a tool that can tell you where is it that you should trade, what trades you should take, and everything. And not only on this pair, but every single pair that you can imagine. Is this baby right here, is the BLW FX Tool. This is an application that I personally created in order to help you guys out and make a lot of money. And super important, it is suitable for every person in the world, worldwide, US, Canada, anybody can use it. All you guys have to do is install this indicator into your MetaTrader 4 platform, and it will actually send you signals. You can make tons of money just by following these signals. And in addition, I included an auto trader that can place the trades automatically in your behalf so that you don't have to actually be on your screen all the time. But there are going to be more details in regards to it in the video that I actually have posted here. But the invitation is rated there. The link is in the description of this video, blwfxtool.com. Hey, so hopefully you enjoyed the content of this video, and if you did, smash the like button to support this YouTube channel. But more importantly, if you guys have any questions or comments to share, you can always use the comment section below, and my team will be happy to reply to you. Thank you very much for watching this video, and I'll see you on the next one.